Welcome back to America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates with Scott Kirshner and Dave Ross. 419-794-3030 is the phone number. It's 419-794-3030, online, arhq.com. I want to remind you, if you missed the first half of the show or you just want to catch up on previous editions of the show, all available for you online, YouTube, Apple Podcasts, Spotify, wherever you consume your media. Just search for America's Retirement Headquarters, all there for you to digest at your leisure. Now, the stock market was up 8% in November, but according to some economists, it's based on hope that the interest rates will finally come down sometime next year. They've been holding pretty steady the past couple of months. Economist Ken Polcari tells Fox Business he disagrees with that outlook.
And so this rally that we saw in November is really built upon that idea that the rate cuts are coming. It's illogical to me, considering Jay Powell has made it very clear that the door is open and he's still not confirmed or sure that the hike cycle has ended. The market is stamping their feet saying, no, we need lower rates. We don't need lower rates. The market can function with 5% rates. And you and I both know that over time and history in the markets.
So I have to ask, can we keep going with interest rates being this high without some sort of fallout, some sort of market correction?
Market corrections are going to occur. The question is, what's the trigger that's going to cause the correction? You know, obviously with 2024 being a presidential election year, that could certainly be something that could cause a correction. But I happen to agree with Ken. I think interest rates are going to continue to be high. I think it's very interesting when Jerome Powell and the Fed makes their various statements about interest rates and whether they're going to be raising rates or cutting rates. The market really waits to hear what they have to say, and then they take optimism when they hear that. So if interest rates drop, is that a good thing for stocks? Generally it is, but I think we're going to continue to see pretty good returns on bonds, on individual bonds, on treasury bonds. 2022 was a pretty bad year for bond mutual funds because when interest rates rise, the underlying value of the bond drops. So it's like a teeter-totter effect. And so what we were talking to clients about, or what I was talking to clients about quite a bit, was if you go into the United States Treasury market, you can pick an interest rate, you can pick a maturity date, and you can lock in your returns on these bonds. The caveat with that is, if you're buying individual bonds on the open market, you have to absolutely keep them to maturity. If you try to sell it before it matures, the person that's going to put a bid in on that bond will say, oh, they're having financial difficulties, and they will lowball on what they offer on these types of bonds. So the discussion I have with clients is you can get a really good rate, but you have to be willing to keep it until the maturity date. And in some cases, we're able to create, they're called ladders, where you buy different maturity date bonds and you just allow them to mature so that there's cash that's kind of flushing into the account on a consistent basis. And then when all of those things mature, you take a look at the interest rate environment at that point and say, is this going to continue, or what is actually happening at the government level that's going to affect these yields? I think the yields are going to stay high for at least the next year. Time will tell, it always does, but it's a very interesting thing. If you bought a bond fund, you're struggling. If you bought individual bonds, treasury bonds, high quality corporate bonds, those yields were pretty healthy, and I believe they will continue to be healthy.
You know, I have a few clients that came in this past couple of months, and you know, one of the things that a couple of them are realtors, several of them are realtors, and I heard a couple of things from a few of different realtors saying, well, they're anticipating some rate drops, and they're anticipating that the market for the real estate's going to change a little bit because of the interest rates falling. You know, one of the things that I find crazy in the area that we live, you know, Nolan and I, we've said before, we live in the same subdivision, and you know, houses that were going on the market when the interest rates were low were gone literally within 3 or 4 days. There was a contingent sign. And I don't see that anymore. I'm seeing it less, and we've got one across the street from where I currently live. It's been on the market for probably 3 or 4 months. It just now has a pending sign. And the house right next door to me, they took it off the market, and it just is not moving to where they want it to move. Have you heard the same thing that I've been hearing about the mortgage rates possibly dropping? Because some of them say, yeah, we're not hearing that right now. So I'm hearing kind of conflicting stories. How about you, Dave? Have you heard the same thing?
I have. You know, the cost of borrowing and mortgage rates are making it very prohibitive for a lot of people to be able to go out and finance. So the people that can buy real estate and pay cash for it, they're in the catbird seat because they can pretty much go to a seller and say, this is what I feel your property is worth. Here's my offer. Take it or leave it. I think this is a very big drag on the economy. So when I think in wishful thinking, they want to see these interest rates drop. The banks certainly want to start making loans or continue to make loans, but I don't know if that's going to be the reality of how this plays out. My oldest sister is retired in North Carolina, and she wants to move back, and she put her house on the market and basically said, took it off till the spring because no one's buying properties with the interest rates being what it is. And of course, like most people, she can't buy a new place until she sells the one she currently has. So there's a lot of people that are sitting on the fence as far as whether or not they are willing to do a real estate transaction given the interest rate environment that we're in.
Yeah, you know, I don't know if there's. Do you think there's a lot of money sitting on that fence with them, like a lot of cash, where people? I know before it was staggering to me the number of people that were buying houses and paying cash for them. I mean, they were just not financing and paying cash, you know. It's kind of like the songs, you know, buy dirt, right? Buying property is not going to depreciate. You're always going to have it. I mean, you're going to have something there. And a lot of people that were looking for ways to invest were buying property, paying cash for it, not having a mortgage. You know, now that the market has slowed and people are asking more than what the market's probably pulling in for these houses, do you think that people are sitting on the sidelines with cash, not looking to do anything right now?
I kind of do. I would say this because clients can earn 5% in a brokerage account without even investing.
Sure.
So,
and that's pretty good.
You betcha. And if that's the risk-free rates, if that continues for the next foreseeable future, let's say the next 12 months to 18 months, I would tell you that those folks might just sit and wait for the environment to turn to where it's in their favor to purchase real estate. If I was investing in real estate, I don't know if I would have luck finding tenants to rent that property. I don't know. I'm not an expert in real estate, but interest rates put a damper on a lot of things if people think the economy is not going to respond favorably to whatever happens with the government.
Leave that to the experts.
You know, there is a class that you guys teach, a workshop that you guys teach throughout the year, and those will resume coming into 2024. You can go to arhq.com/events for more of those. But it's called Threats and Opportunities, and it talks about, you know, whenever there is something out there that is financially concerning, there's also an opportunity to be had, and interest rates are very much one of these things. Ideally, not a great time to take out a loan or rack up credit card debt or refinance your loans that you have right now, but it could be a good time to refinance your investments, being able to look at some of these other strategies that aren't tied to the market and take advantage of them in the favor and being protected from the market if there is in fact going to be a market pullback, being protected from that. So there is time on our side while these interest rates continue to stay elevated to make them work in your favor, but you have to pick up the phone and reach out and see what's going to work best for you. 419-794-3030 or go into the website arhq.com.